Greg Sellers. I am the co-founder of Tether, which puts fiat currencies like US dollars on the blockchain, and also co-founder and chief scientist of Atomic Systems based in Santa Monica, which creates digital objects that are programmable and able to be kept in a blockchain wallet.
Hi guys, my name is Tiana Lawrence. I'm the co-founder of Factom, and we build enterprise blockchain for Fortune 500s and governments. Yeah.
I'm Justin Newton. I'm the founder and CEO of Netkey. We've been working in the blockchain and digital currency ecosystem for about 3 years, and we've been primarily focused on digital identity and primarily how that digital identity is used for risk and compliance in blockchain applications.
Cool. Let's get right into it. A little bit about the topic. Digital identity is obviously a really broad, super vague term, and so we're going to have to narrow down a little bit what we're talking about here. I'm pretty sure everyone in the audience is at least somewhat familiar with digital currency and the way that identity is represented inside, like, for example, Bitcoin, where we have these pseudonymous public keys that are part of a key pair. We want to look at a broader sense of identity, how we can bring real-world identities into these systems, whether that's desirable, whether it's dangerous, and questions like that. So just to get it started, I want to ask the panel, digital identity has existed in the enterprise and consumer spaces for a long time already. We see things like OpenID and OAuth. Everyone's got a Google account. What are some of the deficiencies in the way that we see digital identity implemented now? And what are some of the ways that we could improve it and the use cases that would be enabled there? Maybe Tiana, we can start with you.
So I think of identity, this space is so interesting because there's a lot of different ways to think about identity, whether it's for people or things. And in my space, we think about identity going back a little bit farther. Almost 20 years ago, they had eSign and this other acronym that came up with basically what allowed you to digitally sign, whether it was your credit card receipt or other documents, and that would be legally acceptable. And that happened in '99 and 2000. So what happened around that was it was all about the process. How did you establish that this was the actual person? And I think the missing piece that this type of technology allows us to do is start establishing it in a point in time where you can then reference back to it, and then with other applications you can start transferring that so you can validate again without having to go through the process of, yes, this is the person. You've already established that it is the person or the thing. So that's what I think is, from my perspective, what's interesting for us to do, but I'm coming from it we're establishing identities for people in relation to like loans and mortgages and things like that.
What I've noticed in the blockchain space is that we have this concept of self-sovereignty. And when you hold the keys to your wallet on a blockchain, that gives you exclusive right over the assets contained in that wallet. From an identity perspective, either digital identity or classical identity, we're always relying upon someone else to tell us who we are. So it's Google says that we are this person on Google+, Facebook says we're somebody else, our government says we're somebody else. But in the real world, we actually declare I am ourselves as the core principle of identity. And without cryptography and blockchain technology, we've never had the ability to sort of enforce this digital scarcity of ourselves and then share that with the world. So if the internet is an open network that allows us to find different kinds of information, a blockchain is an open network that allows us to agree upon certain facts. And some of those facts are who I am, and who I say Tiana is, and who I say Justin is, or if I think they're creditworthy, or if I think that they are cute, etc. We have these interrelationships now that we can establish in a self-sovereign sense, where we declare ourselves as the identity and have complete control over it, versus delegating that to a third party like a Facebook or a Google or a government.
I think that's a really important point, because part of the reason that we've traditionally seen third-party like identity service providers offering those services as being valuable is if we allowed anyone to just announce who they were, traditionally, if I can just put up a website saying that I'm Foo Bar and I work at such and such company, there's no real way to validate that information. And so what identity service providers like Google have traditionally done is say, we do some level of due diligence about whether or not this person is real. Do they really have an email account, or in like financial services, do they really have a bank account? Do they have a social security number? Can we, in a decentralized way, in a self-sovereign way, like you say, can we still achieve that same resistance to falsehoods?
Can you completely prevent it? I don't believe so. But if you can, the concepts we've been talking about in decentralized identity are that of declaration of identity, affirmations or attestations about that identity, so the things that I say about myself or others say about me or I say about others. And then delegation of responsibility. So I let my mother have $1,000 a month to do her mortgage, or I let my cable company take $50 a month out of my account to do cable services. So there's the delegation aspect as well. If you have reputation as a core piece, we've seen that reputation systems do actually provide some level of reputability for vendors, saying that they are actually going to deliver on their product, for customers who are going to pay their bills. And I think that as we establish these networks, as they become larger and larger, we can begin to rely more upon that reputation concept. It's not going to be perfect because in a decentralized system, no one can be the very first person to say, I am this guy and I'm perfect, and everybody else says that's true. But I think it's the closest we're going to get. I think it's close in the real world as well. It's a way to match the way we do reputation in the real world in a digital environment.
Sure. And you could even say maybe that there's room in that new model for identity service providers to still exist, because
Absolutely.
I have a strong reason to believe Google's digital key is well protected, and when it signs an identity that actually means something, as opposed to maybe Justin, you might be able to talk like a similar reputation system that's maybe a little bit older, PGP, that has some serious flaws. Do you want to talk to that at all?
I can a little bit. I'd actually love to step back a little, because I think something that we missed on the initial point, or could cover on the initial point, is that blockchain actually brought new requirements around digital identity that didn't exist before. Because in the online world, when identity was used before, it was primarily used in two ways. One is if identity was being shared, say from Google or Facebook or others, that was identity that was used in low-risk ways. It was used to sign up for a magazine subscription, or to, do something, equally high risk, right? And if you were in a situation where knowing somebody's identity was a higher value thing because what it was involved in was higher risk, like payments, like loans, like other things like that, what you found is those were closed systems. It was a PayPal where they took responsibility for validating your identity, knowing who you were, and they took on that risk end to end for the transaction that was occurring. Or if it was a loan site or someone else, they did the same thing. What blockchain brings up is something where you have counterparties interacting, where those counterparties aren't necessarily underneath the same service provider or even any service provider at all. And so now suddenly you need a digital identity that is both shareable, it has to go beyond a closed walled system, and also is highly validated, and therefore can be used in high risk situations. And one of the things that comes up around digital identity a lot is what's the use behind it, right? And so look, if I'm sending $1,000 to my mother-in-law, probably what I care most is that my wife thinks it's my mother-in-law, right? That's what I care about most when I'm doing that transaction, right? Well, what my bank cares about most is that that the government doesn't think my mother-in-law works for ISIS. They actually don't really care, who she is, as much as that she's not working for ISIS. And so that brings up like a different requirement around identity than the use case of what I cared about it for, right? And those validators that you're talking about start to become important when you have these high-risk environments. And that's actually one of the areas where you talk about self-sovereign identity, and you start to map it to situations around financial transfer, around ICOs, around loans, around other things where there may be risk to the counterparties involved. And now you have to know which of the people who were making those attestations you can trust. And so there needs to be some kind of trust hierarchy that allows the participants to start to understand whose validations they can trust and who they can't. I think over time, as the networks get more rich in terms of what the interconnection looks like between people, and they become more mature, so that someone has a decade of history of their identity related to the blockchain instead of a week, right? And time always roots out fraud. It's one of the best ways to is wait. And so, I believe that over time, some of these systems are going to be very, very strong in terms of what they do. But the need for sort of validated validators in the short to medium term has really been brought out for the first time by public blockchains.
Yeah, so how do we bootstrap that initial set of validated entry points?
I think I can jump on that a little bit. So we've been rolling out proofs of concepts and stuff like that. And sometimes people think, we're going to rip out this whole system and everybody's going to live in the blockchain world, which is cool. Which I think, we're talking about the 10 years of history. Like that I think will happen, but that's in 10 years. So what has been effective for us are these tiny little things that it changes a certain aspect of it and slowly makes people feel more comfortable with it. So one of the things, like, people still want to hold paper. So how can you tie blockchain to paper? So we partnered with this company called SmartTrack that does these NFC and RFID chips that then record against our blockchain that then allow us to tie feeder documents. These are things like birth certificates or a social security card or your record from your college, that's real and that wasn't just printed down the street 5 minutes ago and then presented as the building of identity in the traditional world. So it's a little tiny, like, yes, you still got to hold your piece of paper, but then you got to validate that paper, like the age of it and who issued it through, who signed cryptographically that this is legitimate. So I think that is sort of like the thing that makes this more tangible for people to, and bite-sized is what I'm thinking about. But
you also mentioned, are there spaces for identity providers in this paradigm we're describing? When the blockchain was first established, there were no exchanges, there were no wallets, there were no payment providers, etc. It was simply a standard that a bunch of peers could agree upon. And once that standard was functional and worked about exchanging value, then the exchanges came, and the wallets came, and the payment providers came along. If there were a decentralized identity standard, there would be a series of providers that would simply show up. They would have to. You'd have Google acting as a verifier for your email address, or your cell phone provider as a two-factor authentication, or a thumbprint scanner, or an iris scanner. These different organizations can come in and say, oh, okay, if you want to get into your bank account, I need a thumbprint, your password, and Google to say that you're you. And you can actually choose which of those kinds of providers you want to use for your level of security preference. So for your bank, you want it really, really high. For your cable company, the password works. All of those things are simply components of yourself, but those providers have to pop up, and they will exist once the standard exists for them to work on.
Yeah, and particularly with providers, there's recourse when you lose your password, lose your key, whatever. When your factors are cryptographic in nature, like on Bitcoin, there is no recourse. There's no repudiation, right? And I think that's one of the biggest risks that we see, especially while these systems are young, is that we have a lot of systems that you can enter into without realizing how dangerous it is, and how much responsibility you take on as a user of those systems. Is that a problem that we can solve through technology or education? Is that something that's just going to be innately part of doing business in the digital world as we progress? How can we solve that for users, or at least attempt to?
Yeah, well, I mean, I definitely think dealing with key management and revocation and other things like that is one of the big long-term usability challenges that's out there. And, particularly in the self-sovereign identity arena, if I lose my key, how do you go about doing the recovery? And there are a lot of ideas around it, including like, using multi-sig, or having, I could say, well, hey, if Matt, Craig, and Tiana say that this new private key is really me, then it's really me because I trust the three of you and you don't actually know each other, so you couldn't do it without me. kinds of things. So there's tools like that. There's other services that are more centralized that can then go and revoke, right, whatever attestation was made. So if you're aware that your identity has been stolen, you can get those third-party attestations revoked and then reissued to new keys. None of it is super user-friendly yet. So I think that's a place where, as the standards are defined, what we'll see is some of these different service providers taking different approaches, and we'll see what users actually like. I think in any case, it's going to be a little bit messy for a while. There's going to be a bunch of cases where things get abandoned. I mean, what percentage of Bitcoin have been lost or stolen, right? And so in the first 8 or 10 years, we should expect that percentage of identities to get lost or stolen on the new platforms.
Yeah, that's a very real risk. We're going to see systems that are proposed and implemented that fail, and some may even fail catastrophically. And so, should people be wary when they start dealing with this? Does your average consumer have the context necessary to evaluate? Can I adopt this yet?
No.
No. I'm glad we got there quickly.
Yeah, it's going to be a long time before the average consumer has a level of confidence and comfort, and that those of us who are actually developing the platforms have the level of confidence and comfort to expose it to general consumers. So there's high risk in this development paradigm we have today, where we have experiments, we have ideas of how we think it should function, and we're the ones who are aware of the risks and are willing to bear them. Until that entire process has been exhausted, and we've found something that we ourselves feel safe in, then I believe we can expose that to the general consumer, because at that point it is robust enough that it protects them.
Right, and that's similar to what we see in the general digital currency ecosystem today, right? Where the tools around key management, around accounts, around those kinds of things, they're just not completely end-user simple yet, which is, frankly, why in many cases, even people that are on this stage throughout the day and are very focused on the value of decentralization, when their friends first come to them and say, hey, I want to buy Bitcoin, they say, go to Coinbase, right? Because Coinbase has the keys, all that other kind of stuff. But now I don't have to worry about supporting my friend backing up their private keys and restoring them and doing all that other stuff, right? And, all those things. And so they're, in the early days, it's hard to both make the user experience great and stay completely tied to the new technology's full capabilities and functionality. And so I think we're seeing that on the identity front as well.
Yeah. So is there a test bed? Is there a segment of the market that maybe is able to handle the high friction and the risks associated and glean benefits from the use cases that are available? Like, are enterprise users maybe more likely to be able to manage this properly? Probably. Are there use cases in the short term that will help us bootstrap and gain adoption here? In general, I want to bring this back to use cases. How can we leverage digital identity, assuming we get there or get close?
I think that's where the business opportunity is. I know that my company has been focused on that, both with this company, SmartTrack, with the DLock product that has a user interface that then allows them to manage it the way that, don't give them blockchain raw, give it to them in a way that they can handle it and understand it. And that's also what we ended up doing with the Department of Homeland Security for IoT devices, in the same sense. They just want to see the green checkbox that says that identity is authentic and that hasn't been tampered with. They don't want to think about signing the and was it attached to the proper chain and all that kind of stuff. They want to have user interfaces that are friendly. Getting back to what we said about Coinbase, the reason that Coinbase is used is because it's easy, and people want to use things that are easy, and not that there's going to be parts of us that want to use the things that are more secure. But there's little pieces that will become centralized because simply people want the utility of it. And I know that that's what we've been building. So,
what I would say is, any new technology, you may want to start out using it for not the highest risk uses, right? So you should probably in the early days think about use cases where the risk of it being wrong is low. So if it's wrong, it's not the end of the world. And the risk if it's compromised is low. So if it's compromised, it's not the end of the world. So, if you're designing new solutions around the new identity formats, I would try and think about those use cases first, where we're the value of decentralization is there, but the risk particularly the risk to the individuals using it is low in the case that they make a mistake or that the platform makes a mistake in the early days, because we'll learn.
Absolutely. So one thing that we do a lot at GEM is focus on, I think someone mentioned earlier, attestations, which is the association of some claim by one identity or multiple identities about another. And we can do this for a lot of cool reasons, and we also see that I can make a claim that, say I'm a university, I can claim that a student graduated from this school at a certain point in time, right? As we see like more and more of these attestations growing, there becomes this large data web, all this information that's available about individuals. And traditionally, when we have high value information about individuals, we have regulations around how that's anonymized, right? So especially healthcare is a big example of when we have to remove all PII, personally identifiable information, from documents before they're circulated. But we're seeing now, with advancements in AI and machine learning, the opportunity to reverse that process, to take anonymized documents and resolve them back to an identity. And this is called correlation. So the risk of correlation, I think, is one of the big problems that we're going to be facing as we move forward. How serious is that, and how can we approach it in a way that will reduce that risk in this world where we certainly won't stop generating more data?
Yeah, so I think that it of course is a real risk, and I think that there's a lot of things that you can do around that. One is, as much as you can do to keep any exchange of data, whether it be PII or correlatable data, off-chain, so that only the counterparties that need to see that data or information see it. And similarly, as much as possible, if you can have a user's attestations or other PII residing inside of a data locker that they control, as opposed to inside of some large centralized data lake. Those are other tools that can be used to help protect privacy and reduce opportunities for correlation, because you can't correlate on data you can't see. And then finally, anytime that you're exposing attestations or other things, using tools to be able to use short-time lived keys or one-time use keys around that attestation or sharing, makes it hard, even if you're interacting with the same entity over and over again, for them to potentially correlate your returning responses. So there's some work that's being done in those areas. I think that in a lot of ways, it's more talk than completion at this point, but certainly there's been a lot of thoughts in the area.
Yeah, I will second Justin's comment about keeping that kind of information off-chain. If we're talking about immutable data structures that never, ever, ever go away, the moment you lay information down onto one of those things, they're there forever. Some of the researchers I've been talking with in the space of immutable data, where that correlation problem exists, is the Signal application has some cryptographic libraries with a technique called deniable attestations, where both you and the recipient are signing the same message, so that if one of the parties actually leaks that message to a third party, the third party can't tell which of the two actually was the one who initiated it. So even if the record becomes available, you can deny that you were the initiator of the record. And that's the best I've seen in how to actually protect the correlation concern on an immutable network. But it's the best there is. The information is still out there. The best you can do is say, I didn't say that.
That's maybe beyond the scope of what we should discuss here, but I'm going to pick your brain on that afterwards.
I think it's pretty cool.
That's definitely pretty cool. Given that we have tools like this that are being developed, which, shameless plug, the Decentralized Identity Foundation is trying to solve these problems. If you're interested, just Google it and check it out. So we have an approach, right? But we still we don't have an open standard for approaching that. And if you guys are familiar, and I know some of you are, with the way that standards are developed, we know it's in a really, really slow process. What's going to come first? Are we going to see standards emerge after 20 years of hemming and hawing, or are we going to see use cases blaze forward with no regard for compatibility or interoperability?
We've already seen the 2020 initiative from the UN around making sure that basically refugees and other people have identity. They want to have this. It's 2017, right? And it's halfway through, so we got 2.5 years to figure this out. Okay, so we better get cracking. Dubai has a similar initiative, and I think it can go quickly. Other countries like Estonia, totally on point. They got it. I don't think it's going to take 20 years, especially when you have initiatives like that are driving it, that they're putting real money behind making this thing a real thing.
So it sounds like, yeah, and we definitely see places where people are driving forward without standards, right? I mean, Estonia was before the words decentralized identity, I think, ever existed, right? The Dubai proposal that you just talked about, the first 3 rounds of the RFP didn't mention the word blockchain or decentralized, or, by the way, the word privacy, which it's always good when you see someone building an identity system that doesn't have the word privacy in it anywhere. The last revelation version of it did actually bring in the idea of decentralized and blockchain, and actually was rewritten completely from scratch to focus heavily on privacy. So came back really quickly on that one. But then you also see things like the work that's happening with Decentralized Identity Forum and with W3C on the verified claims work, which is more about, once you have the attestations, how do you share them between counterparties in a trustable way, and other things where the standards work is, I think, on one side, like the W3C side, we actually get to draft off the fact that they've already been talking about it for 13 years, and so we just have to be here for the last few of them. And I think, hopefully with the Decentralized Identity Forum, the energy I've seen so far as, frankly, a casual participant compared to a lot of the other people involved, is that there's a bunch of companies there that have businesses that they want to build, but believe very strongly in interoperable standards as core tenets of what they're doing. And so I see a set of incentivization across startups and large companies to actually get these standards going quickly that, I haven't seen since 1995, 96, 97. And so I don't think it's going to take 20 years.
I would agree, not 20 years, but it seems that the innovation cycle always starts with walled gardens and then works about interoperability between walled gardens, between somebody comes along and says, we don't need walls. And when we don't need walls, as long as we can all communicate the same language, if we're talking about the same primitives, then we have a standard, or at least the seed of a standard, and we can go from there. So yeah, you see lots of different companies right now offering different identity components, and they don't work together yet. They will work together soon, and then we will have the standard where they all work together. That's my thought.
Right, and it's pretty important that we get there, because the more eyes we have on any piece of highly critical infrastructure, the less likely it is to be exploited. And as we know from the litany of hacks and exploits that we've seen in this space, that's a real problem. And we want to get to that place where we can use these systems for the high value use cases sooner than later. You have something to say?
I was thinking around it in the sense, yes, I think you're right, these little walled gardens, but we live in this blockchain world where we could create chains that, say, an identity chain, and then attach attributes for example, I'm a Estonian e-resident, and that has some kind of value. That is worth something. Let's say I have a passport from Canada or something like that. That has a different value, and that can be chained together. And because you don't have to attest again and again that you have it, it is who you are in this sort of sense. Then they become attributes of your identity where it then builds on itself, and it builds the value of it. So that's kind of how I'm thinking of it. Yeah. And
like you said, Craig, And Justin, like when you put data on a blockchain, it's there forever, right? Which is another reason that if you hear a use case pitch where it involves encrypting some data, putting it on a blockchain, and only you have the key to decrypt it, it's a terrible idea. Don't do that. But when we talk about securing these systems, we also have to talk about the lifetime of the security guarantees that we want to make. So, if we build up the attestations about an individual, about an identity over a period of 20 years, how does that affect, regulation like right to be forgotten in the Eurozone and other things that we might see proliferated or just ethically? What if I don't want information from 20 years ago to follow me forever, and my identity is like attached to a well-known string that people can look me up by?
Well, typically your attestations in a decentralized setup are going to reside in your own storage locker, and you or your software agent is going to be responsible for which of these attestations it shares or doesn't share, right? And so if there are things from your past that you want no longer shared because they're not part of it, your agent will no longer share those with people, right? You can effectively delete them from your store yourself. So it's, I think for me, one of the most important aspects of a well-designed decentralized identity solution is that there aren't these data lakes of PII and attestations that some third party controls in a giant storage array the way that Facebook or Google does today that they then share on your behalf. Right. What's critical is that those attestations, once they're issued, are delivered to you, and you're in control of who and where they are shared with.
That's something to touch on, though. Is like we've been so accustomed to central authorities saying who we are. It's a whole new concept that we say who we are, and also have that responsibility. Like I think we should all just take a moment and think about. No, it's me and it's my responsibility to attest who I am and to keep my records versus like, I lost my birth certificate, so I'm going to call up the state and say, hey, can you issue me a new one? Like that might be the thing. So anyways.
Right, and we're gonna see a middle ground as we move the data out towards the edges, where we have service providers that contractually are obligated to hold your data and keep it secret and only deliver it when you command them to, because grandma still can't hold private keys, right? But the one last thing that I wanted to touch on before we open it up to questions, Craig, you mentioned self-sovereign identity a couple times. I want to get just a little bit deeper for people that might not be familiar with the space. What does it mean to have self-sovereignty over anything like money or identity, and why is that important? What is it useful for?
That gets into some ideological questions and discussions about philosophy and what is the nature of man and the nature of being and the nature of self. But at the end of the day, if I were to define self-sovereignty, it is the idea that I control the information about myself, I control the things that I produce, and I control the information that I share. And that becomes, as Tiana was saying, a huge responsibility. If I'm willing to take on all the benefits of everything I just said, I now have the responsibility to keep those things safe and keep them protected for myself. And there's going to be a broad spectrum of people who want to be self-sovereign and who do not want to be self-sovereign because of that responsibility matrix that exists there as well. So you're going to see folks like us who will tend towards one side because we're willing to manage our private keys and make that the core of our identity. Whereas my grandmother is going to want to use, her nieces and nephews as her identity verifiers, and maybe her bank and maybe Kmart. Because those are the ones she's comfortable with. She doesn't want to be self-sovereign. Now, if my children become grandparents at some point, they might. It may be an education thing that over time people realize all of these benefits they gain from self-sovereignty is worth the responsibility and the effort and the risk. But it's going to remain a spectrum, I think, forever.
Well, also the responsibility is going to become less because it's going to become easy and seamless. Right. I mean, there were a lot of responsibilities that we had in the past that we have today that we don't see as responsibilities anymore because, they've smoothed out over time. So, right now, anything that deals with public-private key encryption and users having to keep their own private keys has a lot of sharp corners that people can cut themselves on today. But I mean, if we don't round those corners off, this whole industry is gone. So we'll fix that.
Awesome. I think we've covered a pretty broad array of topics at this point. I want to open it up to questions to see what the audience is interested to discuss. We probably have a microphone. I'm just going to vamp and talk slowly until we have one set up here. And we'll open up to questions with that. We're going to start on this side of the room and word over just for these of the microphone. Yeah, right over here, white collar.
Yeah, thank you. Hello. Under what conditions does know your customer system in the world finally be possible exclusively in online remote mode? The laws of many countries require the submission of original documents like passport and ID. When can be fully implemented the remote mode of know your customer?
So if I understand the question, it's around how we can implement KYC in a digital way in a cross-border world.
Yeah.
Justin?
We do that as a business today. So see me afterwards. I can do that for you from a mobile phone or a web browser.
Okay, thank you.
Do you want to expand on that a little bit?
Yeah, I mean, so in our case, that's actually exactly what we focused on for a business, because what we saw is people that are trying to build digital currency or other blockchain businesses didn't get into it because they wanted to become KYC experts. They got into it because they wanted to do something else. And so, what we did is we first built an open source standard around sharing identity between counterparties, which is BIP75 on Bitcoin, but works on other public and private blockchains as well. But then we also came up with a series of tools that include like an SDK that can be built into mobile apps or into a web browser for capturing documents and facial recognition and things like that. And then a set of back-end cloud services that do automated validation by looking for tamper evidence on the ID, checking back-end database sources, doing sanctions checks, potentially doing background checks, other things like that.
Yeah, I got it. Thank you.
Right here
I'll
in the
take
back.
10 more questions like that.
Okay.
We are working on identity, on dynamic identity to identify people based on the last things that they have done, are tested by other partners using the blockchain technology. And basically we work with the IOTA platform. I wondered, what is your opinion on IOTA, if somebody can say? It's a platform for identity.
Does anyone have a strong opinion on IOTA here? I'm somewhat familiar with their model. The way that they have something called the Tangle, which is a new way of reaching consensus over a series of events that aren't necessarily structured into blocks in the way that a traditional blockchain is. I'm optimistic about the applicability of that, especially to like IoT and where we have like many small messages being passed around peer to peer. I'm not yet convinced by the security arguments that have been made, but I'm by no means an expert on that platform in particular. I'm sorry we couldn't be more helpful on that one. There's an enthusiastic question over here right after this one.
So my question has to do with the, Justin, right? What you said about the vault, you can pick and choose stuff that you can take out of it, which is an amazing concept to be able to be totally in control of your stuff. But my question is two parts. Aren't we kind of beyond that? The internet age, we're kind of stuck with, if it's on the internet, it's really hard to expunge. Is that already true? And then with blockchain, where it's all about people vouching for you, doesn't that mean it'll be even harder to, expunge something? If you could just pick and choose what was made public, you could cherry pick what was the good stuff and leave out the arrest. But then isn't the whole point that no one else would ever forget and yours would be blank, but everyone else would say, 9 out of 10 people agree this person was arrested? I don't know, how can you ever how can you really take something away based on your opinion of what should be taken away when it's a consensus model?
Yeah, so I mean, I think that I may not have been entirely clear in what I was saying. So, today, right, when I ask for identity information to be shared from, let's say, Facebook or Google, right, while I get a little pop-up that asks me what I do or don't want to share, it's actually like Facebook at the end of the day who's in control of what is or isn't shared about me, right? And I actually only know what they're sharing about me with the people that I give them permission to share with. They also have all these partners and other people that we're not. So, think of instead of me keeping my name, my birth date, and all this other information that I want to share with them, I'm keeping that in my own privacy locker, right, in my own data locker. So, once I share it with a third party, yes, that person has the information. I don't have a way to take it away from them, right? Similarly, if you talk about something specific like an arrest record, right? No one, they're not going to ask you if you've had your arrest record. What they'll ask for is an attestation from a trusted third party that you don't have a felony record, right? And so you would either be able to share that attestation from a third party, like the equivalent of a World Check or someone like that, or you wouldn't be able to share it, right? And so you're still in control of what could be shared or what could not, but it doesn't give you the ability to lie and say, I've never committed a crime when you have it. Did that make sense? Did that answer your question?
You get one chance to give Facebook the key to your birth date, right? Now they know your birth date, and you were in control of it to that point. But then how do you stop them from sharing it? It sounds like once it's out, it's out. Once you tell someone you were arrested, and you showed them the attestation from the police verifier, then it's on the internet forever, right?
I think it...
On the blockchain.
Well, it's definitely not on the blockchain. So you would definitely never write that information one way or another to a blockchain. I think what is done with data once it's been shared, part of that is the contract you have between you and the person that you're sharing it with, where, I think the goal is to move from a world where you're giving third parties permission to share your data to a world where people are expected to come to you for data that you want shared about them. So let's get away from the arrest record case, because that's a slightly specific use case, but the other things that you would normally want shared about you, your name, your email address, your birth date, right? How many people go to websites today and it's just easier to let Facebook share it than them share it, right? But if we create a new world where instead of Facebook Connect, there's You Personal Connect, right? And the interface that these third parties use to gather information about you isn't to go to Facebook, but to go to you, right? Now you're in more direct control of what you're sharing and what you're doing. And so, it's not to say outside of a legal contract that once you share data with Facebook, they couldn't share it for you or without you. What it is saying is what we need to do is change the paradigm from one where everybody goes to Facebook to learn about you to one where everybody goes to you to learn about you, right? And if you think about most third-party websites, they don't want to be dependent on Facebook to know who you are, because then Facebook is getting to extract value from their customer relationship with you. So they would rather be able to have that direct relationship. We just need to build a way for them to be able to do it.
Right on, thank you.
I'll go so far as to say that if you do let the information out, you have to assume that it's out forever. And so then there are techniques of obfuscation. If we use things like zero-knowledge proofs, we're talking about your birthday. You want to tell somebody your birthday, but your birthday is a condition that somebody cares about for qualification. If I go to an alcohol store to buy alcohol, they don't care what my birthday is. They care that I'm over 21, right? There's a big distinction there. If I want to invest in an ICO, the ICO offer doesn't need to know my income, but they need to know that I am accredited. So there's conditionality that can be held by some third party that can attest to something that's obfuscated information that, again, if it gets out, you have to assume is out forever. But the less you have to provide, the less specificity, the better from that circumstance. So you're talking about conditionality and obfuscation as pretty much the only techniques that we have, because if the information gets out, it's there forever.
Here's my birth date, share it when necessary. You can say, this person needs to know I'm over 18, this person needs to know, that clicked something for me, thank you.
There's also the concept of pairwise identifiers, where when you're interacting with a service, you don't have to expose your like well-known public identifier to them. You can create a burner identity to encapsulate the envelope of information that you want to send to them, so that they know that there is a guy named Matt who was attested to have more than such and such amount of money in his bank account, so he's allowed to enter the country. But they don't have to know anything else, and they don't have to know that that's linkable to my well-known identifier. Because you're right, there is the risk that anyone can publish anything about you that they want, and because if you have a public identifier that's well-known, that graph of data becomes traversable. So people can slander you, but you can reduce that risk by not exposing who you are at the root level. There's a question over here. Black shirt over here.
I just wanted to say, one thing that makes me nervous, you guys, there's kind of an escape. If you lose your private key, then somehow other people can attest. And that just seems like an attack vector. I'm really curious about that. But I think my bigger question, because I think you're running out of time, is does any of this identity management have to be associated with blockchains for some important reason, or is it just really a private key thing?
So the biggest thing that we get out of blockchains when we're trying to construct an identity system is that we get reliable timestamps. So I can prove that something was true at a certain point in the past, which makes it much easier to make strong claims about an identity. And it also allows me to handle things like key revocation, where if I want to publish, a set of public keys that are associated with my identity, and then I want to revoke them so that one is no longer valid because it was lost or stolen, there's some cryptographic techniques we can use to do that and say that after this point in time, no longer consider this key valid. And a blockchain is also like a constantly running network that people can query to get the latest state at least the granularity of a block time. So that's what I would say the biggest benefits we get from blockchain are there. Does that answer your question?
Yeah, in a similar sense, I would say that blockchains will use digital identity as opposed to digital identities will be using blockchains, except for the off commitments aspect of timestamping. So look at it backwards.
Yeah, very true. It's much easier if I can use an existing identity to hold tokens on some blockchain rather than having to spin up a new public key. Maybe I want to do that, but maybe I don't. Yeah. We have, I think, one right here. One more question right here, white polo.
And my last question is, why some blockchain companies from Europe and Asia use Know Your Customer in order to detect American citizens and then immediately restrict their way to participate in ICO?
Yeah, people already require you to check the box saying that you're not a U.S. citizen if they want to circumvent U.S. security law. And if we have a better way for them to do that through KYC, they'll use it unless they're just trying to pay lip service to the idea and still get the U.S. investors. So if we have better infrastructure for that, that's probably good because then we can enforce the legal contracts that we're supposed to be complying with.
We do that for a number of ICOs today.
Okay, I got it.
Thank you very much, everyone, for attending the conference. Thanks to the panelists.